Good morning. I am Malik. Welcome to the War Room. First, I want to apologize to all of you for the delayed briefing this morning. But as you already know by looking at your frozen screens, the situation at the opening bell was completely unprecedented. By now, trading at the Pakistan Stock Exchange has been officially suspended. The KSE 100 index opened and instantly collapsed to 152,000. That is a 16,000-point freefall in a matter of minutes. The automatic circuit breakers could not absorb the sheer volume of institutional panic, forcing the SECP and exchange management to physically pull the plug and halt the entire market. Take your hands off your keyboards. The technical analysis charts from Friday are dead. The IMF projections are dead. We are no longer trading a financial market. We are trading a wartime economy. And today, I am going to explain exactly why this 16,000-point wipeout happened, the geopolitical nightmare that triggered it, and what you must do when the regulators finally turn the machines back on. Let us start with the global shockwave that triggered this morning's bloodbath. Over the weekend, the United States and Israel launched Operation Epic Fury, a massive, coordinated, preemptive strike deep inside Iran. This was not a surgical midnight strike. This was a daylight decapitation offensive. The reports indicate that Iran's supreme leader, Ayatollah Ali Khamenei, along with top military commanders, were assassinated when their administrative compounds in Tehran were reduced to ash. In immediate retaliation, Iran activated its ballistic missile arrays. We are no longer looking at proxy skirmishes. We are looking at a full-scale regional war. Missiles have struck U.S. military bases across Bahrain, Qatar, and Kuwait. Civilian infrastructure in the UAE, including the Dubai International Airport, has been hit by one-way attack drones. For the Pakistan Stock Exchange, this is an economic doomsday scenario. The Strait of Hormuz is effectively a red zone. The global wires are projecting that oil shipping costs could surge by a catastrophic 1,000%. Brent crude is exploding as we speak. Our heavily import-reliant economy cannot survive a prolonged disruption in the Gulf. This morning, foreign portfolio investors hit the absolute panic button. They blind-dumped millions of shares in our blue-chip companies. They are liquidating emerging market assets to seek shelter in U.S. Treasuries and gold. The foreign exit is what caused giants like Oil and Gas Development Company and Pakistan Petroleum to gap down violently right at the open. They were used as ATMs by foreign funds desperately pulling cash out of the country before the borders close. That foreign capitulation is what shattered the floor and caused the immediate drop to 152,000. If the Middle East inferno wasn't enough, we are now fighting a literal war on our own soil. The defense minister has officially declared open war with the Afghan Taliban. Pakistan has launched Operation Ghazab-Lil-Haq, executing direct, heavy airstrikes on targets in Kabul and Kandahar. In response, Afghan forces have launched drone strikes on Pakistani military camps in Miranshah, and heavy ground combat is currently raging across 6 provinces. This completely destroys the local supply chain. The border is shut down, the transit trade is paralyzed. What does this mean for the KSE 100? It means the cement sector is entirely dead in the water. Companies like Chariot Cement and Maple Leaf rely heavily on western border exports to maintain their margins and clear their inventory. With the Afghan border completely militarized, those revenues are gone overnight. Combine that collapsed revenue with the terrifying spike in global oil and energy prices we just discussed, and the manufacturing sector is facing an existential crisis. Lucky Cement, Bestway, DG Khan, the institutions knew they were walking into a slaughterhouse this morning, which is why the bids completely vanished. The order books were empty. When the bell rang, they were only sellers. And right in the middle of this unprecedented geopolitical chaos, the IMF review mission is still sitting in Islamabad. The government is now backed into an impossible corner. They desperately need the IMF tranche to survive the global oil shock and fund a 2-front military mobilization. But the IMF is rigidly demanding a 300 billion rupee tax collection fix. How does the finance ministry levy a super tax on the banking and manufacturing sectors when the country just entered an open war and the stock market just lost 16,000 points? This impossible math is exactly why the Securities and Exchange Commission had to step in today. The 16,000-point freefall to 152,000 was not a natural market correction. It was a macro-driven run on the exchange. The algorithms broke. If the SECP had not suspended trading, we would have seen mass bankruptcies across the brokerage sector by noon. By suspending the tape, the regulators have bought the finance ministry time to figure out a survival strategy before the entire financial system collapses. They are likely negotiating emerging protocols right now, deciding whether to completely ban short selling or freeze the lower circuit breakers before they dare to reopen the market. Despite the market suspension, corporate law dictates that board meetings must proceed. When the market finally reopens, whether that is tomorrow or next week, we have a few critical data drops happening today that you must watch. They will show us exactly how the smart money is reacting to the chaos. 11 a.m., Bershane LPG. With the Strait of Hormuz under threat and global freight paralyzed, the LPG and local gas supply chain is going to be hyper-scrutinized. We need to see if they can maintain supply under wartime conditions. 12 p.m., Imperial Limited. A midday pulse check. Watch the volume anomalies here whenever trading resumes. 2 p.m., Khyber Tobacco Company. Historically, tobacco is the ultimate defensive play during a war or economic collapse. Closing Friday at 308 rupees, we need to see if they declare a massive payout to act as a safe haven for terrified capital.
2 p.m. Hallian, Pakistan, the undisputed heavyweight of the day, closing near 870 rupees. The pharmaceutical sector is a classic defensive harbor during wartime. Hallian's annual accounts this afternoon will be heavily scrutinized. It might be the only place institutional cash looks for safety when the suspension is lifted. Here is your battle plan for the rest of the day, and for whenever the regulators turn the screens back on. 1. Maximum cash preservation. If you were sitting in cash this morning, you survived the 16,000-point guillotine. Do not deploy a single rupee when the market reopens. I don't care if a blue chip stock looks like it's trading at a 70% discount. In a wartime economy, technical support levels do not exist. The floor is an illusion. 2. Wait for the regulators. Do absolutely nothing until the SECP and the Finance Ministry issue a joint official statement. We need to know the rules of engagement. Are they banning short selling? Are they injecting state capital to support the banks? Until we know the rules, your money stays holstered. 3. Watch the wires, not the charts. Your technical indicators are useless. You need to be watching the military wires from the Gulf and Kabul. The next move in the KSE 100 will not be dictated by earnings per share. It will be dictated by military escalation. I am Malik. The rules of the game have permanently changed. Protect your capital at all costs. Survive the week. Disclaimer. StockSense is an educational platform. I am an analyst, not a financial advisor. The market is facing unprecedented geopolitical volatility. Trade at your own risk.